Liquidity is a passion of every banker in this region or globally. And the definition of liquidity is how do you manage it? Above and beyond the requirements of the banks managing the liquidity to comply with the international regulations like Basel III as it's coming our way. So we look at LCR, high HQLAs, and all the SMMR reports, and every banker do this these days. We as a bank went ahead of our way. We started to apply these ratios internally, although the UAE is not Basel III compliant yet, but we operate globally, so we wanted to assess ourselves on a global platform and a global benchmark. That exercise, with or without the oil revenues going up or down, should have happened with every banker in the region anyway. And I think many banks like us, especially the regional banks, have done that. So as a result of that, I think the local and regional banks are pretty well immune these days. So all this myth about, oh, they are distressed, we have liquidity issues, liquidity is evaporating in the Middle East, I think is blown out of proportion. You cannot look at loan to deposit ratio alone and say, okay, but some countries in the Gulf have very high loan to deposit ratios. You're in the loan to deposit ratio, although it's a very important traditional statistics that banks look at and regulators look at, is only one of the statistics because you completely eliminate the capital market financing from it. So I think liquidity in the region is still good. We have seen participation in many of the bonds that we have originated and many of the loans that we syndicated from regional players. And there's still a lot of appetite globally to look at this part of the world as well, to participate in the loans and the bonds that we have originated and the regional issuers have done. So no, I don't see liquidity as a massive issue, but something that you have to always keep an eye on and always measure and always be forward-looking. The main drivers in this part of the world have and will always be the government. The governments are usually spearheading the economy in the projects they come and they bring to the market. And this time, we're actually looking for them for leadership also in the bond issuance. So we have seen a very limited supply of sovereign issuance as compared to any other region of the world, and we debated that in the conference yesterday. I think this will change a little bit and we'll go to some normalities. In any part of the world, you'll find that the sovereign issuers represent anything between 40 to 45% of all the issuers. In this part of the world, because of the high revenues from the oil that we had for the past 5 to 7 years, they represented anything between 10 to 15%. So it's only normal to go towards the 35, 40%. I'm not saying that we're going to go that in 1 year. But that supply from the government will create the yield curve, the necessary yield curve, the necessary pricing curve for corporate issuers and other GREs to issue on the back of that and finance themselves. I think I also see, and I believe there will be an indication from the governments that not only we will be spearheading the projects, we also want the private sector to play a bigger role. We will also help you by creating the price curve for you so the corporate sector can also issue bonds and sukuk and loans at the back of these yield curves. So there will be some transparency in pricing, and I think that transparency is what we need in this part of the world. So yes, if there's one sector that NBAD is in particular close and monitoring and continually to coordinate with is the government sector, and we'll continue to do that. But that doesn't mean we'll do it at the expense of neglecting our corporate relationship. On the contrary, that feedback is what we need to give to our corporate relationships, that sort of guidance, that sort of price exploration ideas that we need to bring to them. And this is what they need. They want us to tell them where can they issue, and now we can transparently tell them once the sovereign gone and issued 5 or 10 years, we can tell them exactly this is where we expect you to pay sovereign plus spread. And it makes it very transparent. We obviously been having a lot of discussions with our clients, and we always try to work with them and our partners on their financing needs and their projections for the future and the growth plans. If there's one word to summarize our discussion, it's hesitation. So yes, they know they need to go to the market. They know they need to issue either a sukuk or a bond or even borrow through a bank financing. Where they hesitate is the pricing. Some of them have came to a reality that yes, we have to pay a price higher than last year to raise financing. Some of them said, but should I go now? Because a year ago, I was offered financing for the same term at substantially lower than these rates. So that discussion is what is really holding them back. But if, again, and we go back to the government, where the government can take a lead, once we have the sovereigns tapping the market, once we have the sovereigns issuing their bonds and sukuk and establishing that yield curve, I think that sort of hesitation will go away. Clarity will be there, and people will understand, look, if the government issued this, my price is government spread plus X. And that makes it easier to have a debate and easier to access the market, and no one will be blamed for overpricing or overpaying or underpaying. So that's the worry they have. The second worry I have is like, they've been getting conflicting feedback. Are there liquidity in the Middle East? Should I be tapping Asia? Should I be tapping the US? Is there really liquidity with the banks? Is the loan to deposit ratio all what I need to focus on? And again, I think there's plenty of credit available for the right credit story. So if the companies were run, have a lot of respect, people understand the business model, they are absolutely resilient, there's a lot of money available for them. Companies who will always struggle in any market conditions will have a tougher time ahead of them. But this is prudency. So it's got nothing to do with the current liquidity scenario, it's got to do with the credit profile of the company. Egypt for us as National Bank of Abu Dhabi is a franchise country. We have been in Egypt for the past 35 years. We'll continue going to be there. We're very committed to Egypt. We believe Egypt have tremendous amount of opportunities available for it, whether in power, whether in oil and gas, and whether in construction. So we are committed, and we see a lot of these opportunities, and we have led many of the transactions like AGPC transactions in Egypt, which we're very proud of. We'll continue to work with Egyptian counterparts, and we believe it offers many bankers in the Middle East a lot of opportunities to invest and co-invest with other banks in Egypt. Challenges in Egypt are multi-folds. I mean, the number one challenge the Egyptians are facing right now is the severity of the dollar shortage in the system. There is a two-tier market. There's the official market, and there is the black market. And they have to find a way to deal with the dollar shortage in the market. And this is what the Central Bank of Egypt is taking a lot of action and have taken very decisive steps in solving that problem by the auctions and the recent devaluation that they have done to the currency. And I'm sure they are already in active dialogue with the banks, trying to find solutions for that. IMF is involved. The Egyptians are talking to the IMF, and that support will be needed. But the Gulf partners are absolutely needed to continue to support Egypt, and that support is also there, extended by what the Saudis have recently done in Egypt. Over a medium term, I say there is a lot of vested interest from many Gulf partners and international partners to keep Egypt progressing and doing well. So that offers a lot of bankers a lot of comfort and confidence in doing business in Egypt. So Egypt will remain a very important part of this part of the world, and it's also going to remain a very potential growth story.